This is April 19th, 2026. Current time is 4:59 in the p.m. Sunday, Eastern Standard Time. Well, let it load up, I guess. I need to just go to my main watch list, I guess, or I can use it off this. For the S&P 500 on Friday, this past week, I thought initially for the weekly level that it would have paused out somewhere in here. That's like the 261.8% level. On a technical basis, it should drop back down to there, 69.79 basically. It never did use that as support before, and it's supposed to, if it's going to break through, it needs to use that as support if it wants to be on a really, really bullish tear. But there's a whole lot more nuanced crap to it. The gravitational point for the month is this gold level here at 67.30. Right now it shows up as being 67.14. So it's all within the same as it was at the beginning of the month. They're really damn close anyway. And Friday, whenever it bumped up to above the monthly level, and you've not gotten a red candle technically yet, which you probably will at market open, then you technically haven't been bearish yet after you broke above all that. It was trying to use that prior resistance level as support too on Friday. So going into the weekend, you would have thought, which I would not want to hold anything through the weekend, especially with all this bull malarkey going on. The way that I view the monthly is you do the monthly level then plus the daily level, then that may give you some hellacious resistance. Since that's kind of what has happened thus far, and if it wanted to be pretty about it, then it'd be real pretty, but I think like that was it, probably that 71.85, 75, and then you need a drawdown from there to somewhere where they're going to take profit. You get more scared reactions whenever you're extended to the high side. You made all-time highs and claimed the war was over with or whatever, which was very foolish for any human to actually think that, that is going to be over with. But for my setup that I've seen many times before in the past that held up very well, if it did drop to here, then that'd be a really good spot to potentially get into a short. And I don't know for how long you need to hold on to it for, because it's always at the time you gotta look at it. It should go up to here, then pull down to at least here. But if it's like nothing but red volume, then it can go further. It can get a little bump at 70, 80. That may happen here in less than an hour, where that tries to create some support as soon as the market opens up. Or if it's going to be based off of the NASDAQ, like most of the stuff has been here lately, then they'll be, we'll go to NASDAQ and see. Did I do a button? I did below. I am dumb. At or above. Go to NASDAQ. The NASDAQ didn't actually go to my, I might be lying to you. I do this crap so much. Yeah, the monthly level is back here. So the way I like to look at it, once you break above, then it should come down to at least there for the NASDAQ because it never did make that. I don't think anyway. It did too. I'm lying. It did make prior resistance as support. It used it as support, and then that's why it gained it some more momentum. And from Thursday's level, Wednesday evening to Thursday, this was a level here, and it tried to not break above that several different times. It finally did, though. The positive 4 deviation and positive 5 deviation didn't quite make resistance. And this is the monthly level, the positive 4 deviation on the NASDAQ. So you broke above, use that as support. If it wants to be extremely bullish still, then it can, which I don't think it will because of Hormuz stuff that's going on. That tends to shake up markets more so than anything. But if it wanted to be typical and that was fine or whatever, then it could break above this and use this as support, just as it did back down here. But I still don't see that as being accurate. For the 30-minute volume node for Friday, try to use the higher side, the positive 3 deviation, as support here. Prior resistance becomes support, and then that's why you got such a bump there. This is just a total hodgepodge. No, it's difficult. I thought Friday and Thursday, I think, on the VIX, from that level I had modeled out on Monday or Sunday evening, this was the statistical, and you can see how it comes out to and hovers around and is close to. So it's like, to me, like I was extremely feeling like this was good consolidation. You had a spike up. I don't know what that was about. Probably some tweet or something. But you had a spike up to the statistical mean, this level here on the weekly. And then you're right in it right now, basically that same exact level. So what you can do is you can model out this one, and that's going to give you about the same exact level again. That kind of sucks. Crude the other day came down to I'm online again. I know I am. I do this crap so much. I think I'm looking at one chart. Okay, the monthly level for crude, the statistical mean was here. Once it broke down below that, I thought the markets would have been, that would have had some correlation with the markets going down and the crude going up. Kept on creeping below that and went down to the -2 deviation on the month for that, so that's fine to be able to bounce there. Many algorithms kick on that -2 deviation to pick it up, to draw it up to an upward trajectory. It's near the statistical mean, so that's on the month, so and you're below where you're technically supposed to be on a statistical basis as well, as far as the average daily ranges go. So you're way below that, so a bump up would be expected. It did too much of a drawdown, needed a bump up. How much? I don't freaking know. I don't know. All this really isn't that huge of a difference in price. 91.90, it can do that easy. And it can bump up to there. That is your level that would have been a circuit breaker halt level for Friday before market close. So many algorithms see that as being resistance as well as a new positive 3 deviation. I think the NKD went way above. No, it didn't quite get up to yet. A monthly level for the Nikkei is up here at roughly 61, almost 62,000. 61,800, call it that. So that would have been more potential resistance. It's definitely been an upward trend past several days, just like everything else. And the Russell broke above level 2 on the monthly. You can see it broken above right there. It usually, if it wants to stay extremely bullish, and what it does is it uses prior resistance. That support will come down to at least. It may have done that. I don't know that to be a fact. Yeah, it did. Came down to it. Yeah, that's one Friday. I was like, I probably should have traded Russell. So you get that confirmation, and you just ride that sucker up, and that's exactly what happened. Seen it a million times before. I just wasn't watching the Russell. I need to have up just the basic ones, like stuff that I actually have enough money in my account to trade with. LE, I've been so correct on that so much at a time, or lately. Right now, though, it's not like worth the trade. You got a couple correlating levels on it. You have positive 3 deviation, what I model out, and top of average daily range, and then positive 4 deviation from anchor VWAP. That one can make some resistance since it's above everything else. Many items stop up there, so that's worth creating an alert at that time to look at. Correlating level is way too far down on a statistical basis, way down here. So that's worth looking at that time too. And it's crazy, like, gasoline futures came way the hell down, but at the pump, like, they don't mind raising prices really quick. They're less likely to lower the gas prices whenever, like, the futures prices come down. It's where it's supposed to be too on Friday. Yeah. It's right in the pocket, right in the middle. If Bitcoin's worth going over or not, it's at some statistical mean level. I think that's I don't know what that mean level's from. That's got to be on one of the monthly levels. So from like 2 months ago, I guess. So that's statistical mean now, so it's right in the pocket too. On a daily basis, you're above where you're supposed to be. On a weekly basis, so I can see. I honestly think this week is going to be tremendous in one direction or the other. Usually, if it's using a mean level as support, then it's trying to gear it for a broader move to the upper side. 49% of the time, at least. Got about 45 minutes left. I'll pause this and start it up again after market opens up, I guess. I've just been doing my own thing and missed out on the open. Crude, it did bounce up to positive 2 deviation. This is all within limits. It went above top or bottom average daily range, so technically it's where it's supposed to be on a statistical basis. And then the level I had that can make some resistance is right here. So it may have not meant to actually make a massive move to the upper side. For the S&P, what I had mapped off at the lower end almost tagged that as soon as the market opened up. So many algorithms picked that up. That's exactly what happened. Like last Sunday when markets flushed, and then you've had this massive gain all week. Same, pretty much identical scenario. RSI was high, Y and go. Mostly buy volume that stepped in after that initial bump down. Let me zoom out a little bit further. What should have been initial resistance from that Thursday level that came down to also. So there was plenty of levels that line up there. You got within the top of the average daily range. That's why it got picked up. But the initial downward move was fine. But I do call this the 1+1 setup. This one here on the 1 minute time frame is positive 3 deviation. On a 30-minute time frame, positive 3 deviation. So you got 1+1 set up. This one is worth looking at that time tomorrow, this evening, whenever it does happen. If it does happen. If. That one is quite interesting. Technically, you've not had, I mean, it's always a little bit difficult to read. I know it should pull back because like all those gains from past week was based off of the Strait of Hormuz being opened up, and now it's closed again, and somebody's shot some boat or something out of the water over the weekend. And then you did have buy volume, but again, like, you know, my setup, my rules, it's going to be difficult to take a trade at the market open unless you just have high conviction at, you know, one direction or the other based off the weekend news. And it can technically keep on pulling back. It's below the top of the average daily range now. It's within statistics and probabilities. But then you have to look at it at the time. You've had mostly sell volume, then you had bump of buy volume, but then you couldn't maintain the buy volume. Buy volume tapering off, volume in general is tapering off. As of right this second. Volume's tapering off to the buy side on crude, even though it is in an upward direction as of right this second moment in time. And that's difficult because you're going to get that immediate knee-jerk reaction at market open, and then you're going to have a tapering off effect regardless. But, you know, within that parameter there, and again on the S&P, it's within parameters for it to go up and then pull back. And that one would be totally fine. NASDAQ came down to the top of the average daily range to try to make some support there again. Like, no volume. No volume right now. That could mean it's at equilibrium, that it's not necessarily buy or sell right now. Or, it's, you know, that's where the auction process happened, and then it's found its equilibrium, and it should be fine right now. So it can go up. Usually bulls step in whenever bears step out, if bears are done hammering it down, then bulls can step in. And bulls typically win most of the time. If you look at a longer term time frame on the NASDAQ, it definitely goes in an upward direction long term. Let's see if the 30-minute time frame on this one lines up as well. Oh no, it's not quite. S&P's closer. It sucks to have decent conviction knowing that you're close to the upper end of the range that you need to possibly be shorting at, and then you get it dumped down, and then you're not necessarily sustaining a dump. You're not either direction. It's just not. That volume node right now, you've gotten into 10 moving average. It should not make a massive move right now either way. It more than likely will come up to here at least. And again, if it comes up to 72.19, that'll be the area that I'd be more interested in short at. We'll see what happens. I got my alert set. I'm not going to watch it like a hawk right now. It can go either direction. You're in the top of the range, at the top of the average daily range. You're running into 10 moving average. Statistical mean on the days at 71.50. My level that I have for the monthly, and then the daily statistical positive 3 deviations is up there at 72.19. That'd be way more interesting for me to be able to short, potentially. All right, goodbye.